Hello everyone, this is Trade Currencies, Learn Forex, and for this week I've got another video about entries. This is part 2. Now, in my last video I showed you a complete 4 simple step-by-step plan you need to consider before you take your next trade. In today's video I want to continue to dig in deeper and explain exactly when and how to take a trade entry depending on your trading style. Okay guys, this is me. Welcome to another weekly video, entries part 2, and I'm a proud Canadian trader. I display that right here, and if you want to reach me, if you have any questions, you want to talk about something, I'll answer them all. There are no dumb questions. I've said this before, and if you want to reach me, here's my email address, mskyj007@gmail.com. Okay, I want to do a quick review of last week's entry video. It was a 4-step plan, and there are 4 questions you have to ask yourself before you even consider entering your next trade. Now, the first question is what's the market doing? Now, what that means is you're trying to establish the direction of the market, okay? Direction is super important. So are we in an uptrend? Are we in a downtrend? And because we want to keep trading very simple, we want to trade with the dominant overall trend. So if we're in an uptrend, we want to take buy trades. If we're in a downtrend, we only want to take sell trades. And I've got a super easy way to show you the direction of the market. You can do this in just a few seconds when you look at your charts. Now, the second thing here is who. This is the second question. Who is in control, the buyers or sellers? So in an uptrend, you want to trade with the buyers, and in a downtrend, you want to trade with the sellers, okay? But depending on where the market is, and this is your third question, where's the market right now? Either the buyers or sellers may be in control, in contrary to the overall dominant trend. And again, on the charts, I'll show you what that means. Now, this there are different market phases, so even in an uptrend, price goes up, down, right? That's a down phase, up phase, market cycles higher, comes back lower or higher. So this is an uptrend, and you can see these market phases, and that's what number 3 is all about, okay? And finally, number 4, when can you consider a trade entry? And with our simple, easy to read chart strategy, I've only got 2 entries for you, quite simple, that anyone can follow. It's you're either looking at an early entry, okay, an early entry, or the second entry consideration is a trend continuation entry type, okay? So these 4 things again, once you learn how to do these properly and ask the questions and answer them, you will be anticipating your next trade setup with much higher accuracy and degree of success than most traders out there. So let's just continue, and I'm going to go to the next slide here. Okay, the main early entry. Remember I said there are only 2 entries that are important for you to consider, and I've got the charts. We're going to look at the charts in just a moment, so hold on to your hat, okay? When to enter a trade really depends on whether you're a conservative or an aggressive style trader. And I've mentioned this many times in previous videos. You have to understand yourself. What is your trading personality? Are you a very conservative trader? You're always looking for more clues? Or are you a very aggressive trader? As soon as you see an entry, you're going to go for it? This is super important, and you will only learn this once you start trading live. Now, the first entry that I want to talk about is the main early entry, okay? And this is super important. This will suit the more aggressive style trader. However, I'm going to suggest even the conservative traders to look at this entry because it's so easy, okay? It actually, the charts will give you the actual clue and the signal when to enter, okay? And we're going to look at that in just a moment. So for this type of entry, the main early entry, you're looking for the beginning of a new trend, and you want to enter as soon as possible in order to catch the maximum amount of pips. in case the trend runs for an extended period of time, right? How often have you seen a trend start and just keeps on going and going and going for 300, 400, 500 pips or more? Well, that's what we talk about when we talk about the main early entry, getting in as soon as possible and riding the trend. Now, of course, not all trends will do this, but this entry signal will give you the early entry for you to have any hope of catching the long trends. Now, this main entry is based on a mechanical signal and confirmation. As soon as we look at the charts, I'll show you what that means. Okay, let me just continue, and there we go. Aggressive entries, the early bird discount. Okay, so you know when you get into a trend early and it's going higher, let's say in an uptrending pattern, then you get in low and you're going to sell when price is high, right? Or in a downtrend, you're going to enter a trade at a high point and then close your trade at a low point. Okay, so that's what we mean by early bird. Okay, as soon as a new trend appears, aggressive traders, if you're an aggressive trader, you want to jump in and look for limited risk and greater rewards. Okay, so let's take a look at some chart examples. Okay, we're going to look at the British Pound USD. This is the daily chart. This is the only type of charts we trade, guys. Okay, and remember in last week's video, I used a main directional trend line. You can see it changes color here. We start at taking a look at the left side here. It's pink, then it turns green. Green, we're looking for buy trades. Pink here, we're looking for sell trades. Okay, so when we talk about one of the two simple entries that you can consider, the first one's called the main early entry, and that is when a candle crosses above and closes above the line here. So this is the trend directional line. Okay, it's a moving average. Take a look over here, and here's the first one. You see the white bullish candle, and when we have confirmation down below, okay, in this case it's not good confirmation, but when we have confirmation, we're good to go to take a buy trade. So the next one, again, this is the early entry. This, by the way, right here is an example of a continuation trade, but I want to keep that for a few minutes later. So let's take a look at all the candles that close, okay, above or below this line. Now, this one did not close below the line, so this is not an early entry. However, take a look at this candle. Okay, early entry, getting in here. Okay, stop loss here, and this would have been a fantastic trend opportunity. You've caught the train just as it left the station. Everything confirms here. We use a MACD for momentum and another indicator. I talked to you about this in my last video, so you want to check out my last video on entries. It was called Entries Step-by-Step Plan. Okay, and I'll put a link down below this video for you to catch up on that again. But take a look at this. Enter right here. You would have written this down all the way down to about here, probably being stopped out right there. Okay, let me just take that off, and that was good for, I just want to take a look here. Okay, I get my crosshair tool, entering there. You see? Look at that, eh? Good for about 719 pips. Fantastic. Okay, so there is one great example. See how easy it is? You're just looking for a candle to close either below or above a line. It's pink here. You're only looking for sell trades. Now, let's continue, okay? And this is the same trend here. So there is no early entry all along here so far. There's no other early entry trade signal. These are continuation types. We'll talk about that in just a moment. But until we get a change right here, until we get a change in the color, and again, you can see this huge candle right here is another early entry candle. I don't like it just for the fact that it moved up too high, okay, and I would wait for a retracement, okay. Now this one crosses and ends up below, so there's another early entry. Again, there's no confirmation here because the MACD is not below the 0 and we have green here, okay. So this is a volume indicator, so there's no entry here at all. Now here again, the line changes to green, and we have, let me just take that off for a second. See this smallish candle here, okay? It's not that clear here. We have volume though. So you could have gotten in here or gotten in after this big candle where we have clear indication. And this is an early entry candle again, riding all the way up for a lot of pips, okay? So again, color, the trend directional line here changes color. Here's an early entry, okay, and you can see that would have made some money for you. We're going to just quickly go by because I want to show you these as many as possible, okay. So that was good. Here is another good one. You see this just crossed up above this green line, okay, and it looks pretty good actually. The MACD might have been just above the 0 line here, but in any case, here's another one. Take a look, guys, how easy this is. Just look for the candle. Look for the first candle that crosses the line here. That would be your signal. Then the next step is to confirm with your indicators below your charts. You're mainly interested in momentum, volume, okay? And take a look. That's another good winner right there. Here is another one. This actually crosses up. See this big white candle, okay? There's the MACD is below. The volume is not good at all here, so I wouldn't have considered this, okay. And now the next one is this one, okay. This one would have been pretty good. Your stop loss here you would have pulled back. You actually would have been stopped out here, but you would have made probably some pips. And again, the next entry would have been here, okay. Oh, I'm sorry. Let me just get rid of that. Since we have a pink here, there is no other early entry. This is not an early entry. This is in fact a continuation type of entry. So because it stayed pink, there is no early entry. You look for the early entry once the candle color changes, and look at that right there. You see it changed from pink to green. This white bullish candle closed above the green line here, and it actually looks pretty good here. So that would have been a great entry, stop loss, you know, somewhere here, and you would have written that up for some really good pips. So that's an example of the early entry signal, guys. It doesn't have to be any harder than that, okay? So let's just erase that, and let's get back to the presentation before I go on to the charts once again. Okay, guys, the second type of entry, besides the early entry, the second one here is called a trend continuation entry. Now, the trend continuation, you look for this entry after a new trend forms, right? So you need a new trend after the main directional line changes color. Okay, so you look for a new trend to form, and then you wait for price to make a swing high or a low, followed by a retracement or pullback toward the main directional moving average, okay? Then you get ready for the trend to resume. Now, this may sound a little bit complicated. I'll open up the charts again in just a moment to show you what I mean. Now, for the trend continuation entry, this now really does depend if you're a conservative or an aggressive style trader. If you're conservative and you want more confirmation, you wait for the retracement or pullback to finish with more confirmation, okay? And I'll explain what that is in just a moment. Then you enter a trade once price now resumes back in the dominant overall trend direction. Or the second thing you can do, there's another entry, you may wait for a breakout of a previous swing higher low in the overall dominant trend direction, okay? So that's if you're a conservative style trader. If you're an aggressive style trader, then you generally look for retracements or pullbacks just like the conservative style trader would do, okay? However, you would enter the trade before full confirmation has been established. So you don't necessarily need all the confirmation like a conservative trader. And again, I'll show you what that's all about. Okay, so first of all, in a trend continuation entry, we're going to look at the aggressive, if you're an aggressive style trader. Okay, and let me just go right to the charts. It's probably the best thing I can do. Okay, we're going to look for the trend continuation entry, okay? Just keep that in mind, okay? Now let's start at the left side here, and I'll show you a little bit of a quirky thing here. First of all, we have a downtrend, okay? So we're looking right here for any sell trades below the pink directional trend line here, but we're not talking about that just yet. Let's take a look at this first candle right here, okay? See this white bullish candle right there? Okay, that closes above, and that's the start of a new trend, okay? So that's a new trend. You see it green here. I would not have taken a trade because you see there's no confirmation with the MACD, even though there's good volume. Just because you have volume doesn't mean that it is good for a trade entry. Just keep that in mind. You have to have all of your indicators pretty well agree, and in this case they don't. So here we have a bullish candle, okay, not a good trade entry. It's the start of a new trend, but then all of a sudden we have a black candle, bearish candle, we have pink again. So this is the start of a new trend to the downside. Everything seems to be confirming going higher. So again, there's no sell to the downside, even though we have pink. But then again, take a look at this candle right here. Another white, beautiful bullish candle. Everything confirms. So that would be the early entry. Just want you to understand, because remember, we changed colors. So every time you change colors, you have a new entry. You can only have an early entry candle, which this is, after the color changes. Now we're looking, the price is going higher, it's trending higher. We're looking for a pullback, and here's the pullback, guys, okay? So take a look over here. It's still green. You can only have a pullback in an uptrend or a downtrend when the color stays the same, okay? And it stayed the same from this early entry right up to here. So here is the pullback. And the aggressive style trader would look at entering either one or two candles, bearish candles. They're not looking for the full confirmation. Confirmation is here, though. You can see the momentum is still above zero, so still pretty good momentum. Down here, though, we have the volume. There is not much volume, so so the aggressive trader may still want to take an entry, and of course the stop loss would be here, and still would have made fantastic pips. The conservative trader would have waited for confirmation, okay, and the confirmation came with this candle right here. Confirms and confirms, okay guys? So the conservative trader would have made, the difference is the conservative trader would have made the pips from here to about here, whereas the aggressive trader would have not waited to here, which in fact is a breakout. You see, this is like a kind of a breakout of the previous swing high, which I talked about. So a conservative trader waits for confirmation or breakout trade, but the aggressive trader will often take a trade on a candle that is opposite to the overall dominant trend. So the overall dominant trend is up, which means we should be looking for white bullish candles to confirm that the trend is continuing going higher. But the aggressive trader waits for price to come back down and get in at a bearish candle, giving them the extra pips from here to here. Do you see that? An entry for the conservative traders here, and the conservative trader lost these pips from here to here. The aggressive trader would have gotten in there, okay? So that's one example of a conservative and aggressive style continuation type of entry. Now we move along, okay, and price comes down here. You can see this is a signal candle right here. Okay, that's great. That's the early entry, and I suggest everyone get into these early entries, okay, because that gives you the best risk to reward. Your stop loss could have been up here somewhere, and you would have made your pips all the way down to, you probably would have been stopped out here. Take a look at my exit strategies from a few weeks ago. I'll also post a link on that below the video. Okay, so take a look here, and you see, because it stays pink, this here, right here, with this black candle, is a conservative style continuation trade. Okay, it also it's a breakout of the previous swing low. You can see that right here. So the entry would have been here. Might not have made a lot of pips, okay, depending on how you would have done your profit target, but you would have made some pips possibly, and then been stopped out once price got to about here. Okay, because you want tight stop losses when you're a swing trader. Here we do have some confirmation here. So, okay, so that is the conservative entry. The aggressive entry, however, waiting for maybe 2 candles in a retracement. There's 1, there's 2, getting in right there. Why? Because we're still pink, okay, which means we're still in a downtrend. And here, MACD is below 0, and we do have some volume here. So guess what? Getting in here would have made all these pips from here down to here, okay? Whereas the conservative entry trader would have gotten only in here and maybe made this amount. So the conservative trader missed out from here to here, okay? Aggressive got in much earlier. And again, okay, let's continue really quickly. The trend color changes. See this candle? This is your early entry candle right there, guys. Okay, great candle. You would have made these pips all the way up to here, okay? It changes green, and you know what? We are below this. We have some volume, but we're below the MACD. So again, it depends on your trading style. If you were looking to get into here, that certainly shows momentum. And you know what? There is a way to check. In my next video, by the way, there is a way to check exactly where the MACD is here. I'm going to continue the series on entries by showing you how to properly use the indicators to tell you when an entry is good and when to stay out of an entry. Okay? But regardless, let's say you did take the trade, it went up, and you would have made those pips. Now, again, take a look at this candle. Early entry, right? Why? The green changed to the pink, so we have a start of a brand new trend. There's your entry right there, guys. Stop loss there. Would have made all these pips down here. Now, as long as this stays pink, we're looking for a retracement. That's the continuation trade entry, right? Looking for a retracement, and then another chance to get in on a downtrend because the overall trend is down. So we're looking to get in with the overall dominant trend. In this case, it's downtrend, right? So the aggressive trader probably would have gotten in here or waited, but aggressive trader gets in here, stop loss here, and guess what? Rides it all the way down for huge pips, okay, guys? And this is one good pair. That's a really good pair to trade. Most of the time it's the Australian New Zealand dollar pair, okay? It's often much better, more volatile than the let's say the Euro USD pair, okay? But anyways, just showing you the aggressive trader gets in here on an opposite candle, and the conservative trader waits for a bearish candle, which this is right there. The conservative trader gets in here and still makes all these pips, okay? But misses out, and let me just... So the conservative trader gets in here, but misses out on all these pips from here to here. Okay, so now do you see the difference between the aggressive trader and the conservative trader? The aggressive trader always gets in on an entry that's much earlier than the conservative trader. Okay, so and this is what I'm talking about between the styles, aggressive and conservative style trading. Okay, so you have to know what suits your personality best. Okay, and and then just practice like crazy. So we're almost finished the video, guys, and let me continue by saying what I said in my last week's video. Taking trades is the easiest thing to do in trading. I mean, you just basically click on the sell or the buy button. But if you don't have a reason to trade, and that's the problem why you or most traders in the 90% group of losing traders, you don't have a real reason for trading, and you need to ask yourself the 4 questions, the 4 W's of trading, okay, that will help you understand why you should take a trade or why you should not take a trade. Now, as a final reminder, in our stress-free trading program, this 4 step-by-step plan, which are the 4 questions you ask before you start trading, before you enter a trade, applies to our trend trading system, because we're trend traders, and gives us the best odds for success. So remember, we're trend swing traders. We only trade in the same direction as the overall dominant trend direction, okay? And that is dictated on our charts by that big, thick, moving average line. It's called the trend directional line, okay? We trade only in the daily charts. This gives us the best odds for success, and keeps us out of bad trades and a lot of false signals, which you will get on smaller time frames, okay? Our trade entries are based on a manual set and forget system. We only think about the 2 types of trade entries, which we discussed today: the main early entry or a trade continuation type of entry, okay? And we are pretty well finished. I just want to say one more thing. Thank you very much for watching this week's video. Don't forget to subscribe and click on the like and comment buttons below the video. If you have any questions, I'd love to hear from you. There are no dumb questions, and I'll answer all of them. So take care, guys. Next week, we're going to do one final video on the trend trading, and we're going to look at, we're going to take a lot deeper look at the indicators I'm using, or that you could use to help confirm a good trade entry, or to tell you when to stay out of a trade. Okay, so take care. We'll look forward to talking to you next week. Bye for now.